Okay, you've got to see what's been happening. One minute the market is in an absolute free fall, and the next it's rocketing back toward the highs. It has been a week of pure whiplash in crypto, and it leaves us all with one burning question. What on earth is actually going on? So let's get right into it. The month of November just delivered a total gut punch to Bitcoin, dropping it by a staggering 20%. I mean, that's its worst monthly performance since the big crash back in 2022. For anyone watching the charts, it really felt like there was no floor left.
And then this happens. Just as the panic was hitting a fever pitch, Bitcoin suddenly roared back to life, clawing its way back to that $68,000 level. You have a brutal drop, immediately followed by this sharp, defiant recovery. So which one is it? Is the market collapsing, or is it getting ready for its next big move up? This contradiction is exactly what we're going to unpack today.
You know, what's so interesting is how this all just boils down to psychology. This quote perfectly captures the two opposing forces at play right now. On one side, you've got that powerful, headline-driven fear. But on the other, you've got this strategic search for opportunity inside that very same chaos. Let's break down how both are shaping this market. Okay, first up, the rebound from the brink. Before we get into the why of it all, let's look at exactly how the market pulled off this sudden U-turn. For the traders out there, this was the flashing green light they were all waiting for. There's this technical indicator, right, called the Relative Strength Index, or RSI, and it hit a level known as extreme oversold. Think of it like an elastic band being stretched way too far in one direction. It's a signal that the selling has probably gone too far, too fast. And like clockwork, all those investors waiting to buy at a lower price, the dip buyers, they saw their moment and jumped right back in. So what stretched that elastic band to its breaking point? This number right here. Over $200 million in liquidations. That's just a massive wave of forced selling. See, this is what happens when traders using borrowed money get their positions automatically closed out, and it creates this cascade of selling pressure that completely washes them out of the market. It's a textbook case of market exhaustion. But look, technical signals are only ever part of the story. Now we've got to zoom way out to the much, much bigger picture, the Fed rates cut gamble. This is the huge macroeconomic force that's really pulling the strings for all risk assets, and that absolutely includes crypto. Here's the deal. The market is betting more and more heavily that the Federal Reserve is going to cut interest rates this December. Now, why does that matter so much? Well, when rates get cut, it becomes cheaper to borrow money. It also means safer investments like bonds don't pay out as much, and that pushes investors to look for higher returns somewhere else, which boosts the appeal of assets like Bitcoin. This hope, this gamble on what the Fed will do next, is a massive driver of how the market is feeling right now. And this all lays out two starkly different futures we could be facing. The bull case is pretty simple. The Fed cuts, money gets cheaper, and it's full steam ahead for assets like Bitcoin. But the bear case is just as possible. Inflation is just too stubborn, the Fed has to keep rates high, and the pain continues. The entire market is basically holding its breath. Which brings us right back to psychology, doesn't it? These wild swings we're seeing aren't just about spreadsheets and inflation data. It's about a herd of investors stampeding toward what they think is safety or away from what they think is danger. And right now, the biggest signal they're all watching is the Fed's next move. So we've got the market technicals, we've got the macroeconomics. Now let's add another layer of complexity, Wall Street's Great Divide. What is the so-called smart money, the big institutions, actually doing in the middle of all this chaos? At first glance, it looks like pure, unadulterated panic. A staggering $1.2 billion flowed out of Bitcoin spot ETFs in a single brutal week. I mean, that is a massive, flashing red signal of fear coming from both retail investors and some of the bigger players. But here is where it gets truly fascinating. You can see the divide perfectly on this slide. On one side, you have the fear signal, loud and clear. Those massive ETF outflows, billions in liquidations. But on the other side, the greed signal is just as strong. While some are selling, BlackRock clients are calling Bitcoin digital gold. And get this, a firm named Bitmine just announced its plan to acquire a massive 5% of Ethereum's entire supply. The takeaway here is that while the crowd is panicking, some of the giants are quietly buying up everything they can. And even within that whole ETF space, the story isn't so simple. While Bitcoin ETFs were bleeding cash, funds focused on other projects like Solana were seeing consistent money coming in. We're talking 19 straight days of inflows. This tells you that the strategic money isn't just buying the dip blindly, it's rotating into specific areas it believes have that long-term potential. Which brings us perfectly to our next section, blockchain's quiet revolution. Because while everyone was obsessing over Bitcoin's every little price move, something truly transformative was gaining momentum right under the surface. And that revolution is all centered around a concept called real-world assets, or RWAs. To put it simply, this is the process of taking tangible things from the real world, like a piece of real estate, a government bond, maybe even carbon credits, and creating a digital version or a token of them on a blockchain. It's all about bridging the gap between traditional finance and our digital future. And this chart shows you exactly why RWAs are the hidden story right now. While the broader crypto market was down 20% in November, the RWA sector just exploded, growing by 28% in just the last week. A completely different narrative was being written, far, far away from the mainstream headlines. And this isn't just some abstract hype either. The RWA market cap just smashed right through the $30 billion mark. We're seeing major players making huge moves. Grayscale is calling Chainlink the backbone of this whole tokenized finance world. Chainbase is getting ready to launch its RWA data mainnet. And even in related sectors, privacy coins like Zcash surged on news about being quantum resistant. There's real development and real money flowing into the space. Okay, let's pull all of these different threads together. This brings us to our final section, a tale of two markets. Now we can finally understand that great crypto divide we've been talking about. So what this all really reveals is that there are basically two different crypto markets operating at the exact same time. First, you've got the herd market. This market reacts to headlines, to fear, to Fed announcements. It chases momentum and usually ends up buying high and panic selling low. But then you've got the strategic market. This one tries to ignore all that noise. It accumulates when prices are down, and it focuses on the long-term infrastructure and those overlooked stories, like RWAs. And we can actually break down the mindset of this strategic market into 4 pretty clear steps. Step 1, just ignore the noise of the daily price charts. Step 2, identify sectors that have real fundamental growth, just like we saw with RWAs. Step 3, use those periods of widespread fear as your opportunity to accumulate the core assets of those sectors. And finally, step 4, bet on the long-term story, not the short-term hype. Ultimately, this whole story just goes to show that the market's next move isn't just about charts or what the Fed says. It's behavioral. It's about whether you're reacting with the herd or you're acting with a strategy. Which brings us to the final question to really think about. Which market are you in?